and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth, and I'm delighted to welcome back to the podcast today Tom Hibbert, who is our Chief Investment Strategist.
Hello, everyone. Great to be back.
Welcome back. Nice to see you. Happy New Year, if we can still say that, even though we're in February.
I'll let you get away with that one.
So we've missed you whilst you've been away, but just to remind everybody, this podcast is based on our weekly markets review, and we are here to cut through the noise and demystify what is going on in a simple and easy to understand manner. And if you like what you're hearing, don't forget to hit follow on Spotify or Apple or your podcast of choice, and you will never miss an episode. Let's get into this week's coffee break. Grab your coffee, listen in. This week we are going back to gold, silver, and also looking at Bitcoin, which is sometimes referred to as digital gold.
Yeah.
Because all of those alternative asset classes, as we call them, fell substantially in value in the last week or so. And I know this volatility is something we've been talking about, cautioning about for some time now. And also whilst you're away, Tom, we did talk to Kamal in a bit more detail a couple of weeks ago.
Okay.
And we were talking about silver surge, but thinking that probably it was reaching an all-time high at that point. And that was kind of off the back of a perfect storm of demand from governments, industry and investors. But Kamal was suggesting that we'd hit peak silver, given there was limited supply. So we were expecting some market volatility, but perhaps not quite as much as we've seen in the last few days. So first off, perhaps you could just give us a little bit more background and tell us exactly what's been going on.
Yeah, absolutely. So I'm sure everyone knows by now, because it's just been so widely reported. Yeah. Gold and silver have been on an absolute tear. They've been totally parabolic.
Parabolic.
For the last...
I'm glad you're back. Love it.
So it's been a remarkable couple of years, really, for precious metals markets. Yeah. And that all came to quite a drastic end, at least for now. I mean, that sort of burst on Friday, and there was a huge collapse in the value of silver and gold. The biggest fall in silver in particular since 1980 on Friday.
Okay.
To put it in perspective, silver down sort of 40%. On the day or over a couple of trading sessions. Gold down over 20%, so really massive drawdowns.
Yeah.
Given the strength of the recent performance, even so far this year, both of those commodities still remain up. So gold's up over 10% still, and silver's up sort of 17-20%. And we've seen another resurgence again this week.
Okay.
So we're seeing a bit of a recovery, particularly in gold, but in silver as well. Bitcoin as well slid to its lowest level since last April, closing the week down about 10.5%. And that has been a bit of a more difficult market. Yeah. Cryptocurrencies have been, they haven't performed as well as precious metals. So Bitcoin year to date is down 14%, and it's struggling with its reputation for being digital gold.
Yeah. Given all of that, what was it that then kicked all this activity off?
Two key factors, I would say. The first is a little bit more technical. The margin requirements were increased for precious metals by the metals exchange. So basically you can trade with a small amount of cash, risking a lot of capital, and the requirements for the amount of cash that you need were increased. So the leverage requirements were increased, which meant that people had to post more cash in order to trade gold and silver. It's the CME, the metals exchange in the US, increased their margin requirements. And that actually impacted the sort of... That injected a lot of volatility in overnight markets in Asia, which then spread into European markets, and we had this global drawdown in gold and silver futures markets. So that was one factor, but a little bit technical. The other factor was the announcement from the US administration that Kevin Warsh, an experienced central banker, was now almost nailed on to be the next Fed chair after Powell's term comes to an end in May. So, Kevin Warsh, I think he's actually a very good candidate, a very viable candidate. He's been a vocal critic of the Federal Reserve's liquidity policy, quantitative easing, this
Yep.
policy of effectively printing cash. And that has, led to a little bit of a crumbling of the currency debasement trade.
Okay.
If you print cash, it undermines the value of the US dollar, and that has led a lot of people into precious metals as alternatives as a store of value away from the monetary system. And the fact that he has been such a vocal critic of that policy that has undermined the US dollar,
Yep.
it's meant that the rally in gold and silver has come to a bit of an
Okay.
end. So it damaged that currency debasement trade on Friday.
So just for those of us who don't really understand what the currency debasement trade means, just explain that again in simple terms.
Sure.
for us.
So if you inject a lot of cash
Yep.
into the system,
Yep.
it undermines
to buy bonds, for example.
Yeah, so they're buying bonds, replacing those relatively illiquid government bonds
Yep.
with liquid cash. If you have more US dollars in the system, each US dollar is worth less. You think
Yep.
supply demand, there's more supply of something,
Got it.
its value falls. So the value of the US dollar falls, and that means that there's inflation, creates
Yep.
inflation, and people want alternative assets that maintain the real value, the value after inflation of their wealth.
Okay.
And gold and silver has been, gold in particular, effectively the oldest form of money.
Yep.
That's that's been the store of value that has protected people against currency debasement
Right.
and inflation in the
Okay.
US. That's been driven by the Federal Reserve's policy of printing money through quantitative easing.
But Kevin Warsh coming in is saying that he's not particularly in favour of that.
Yes,
as
so
a
he
policy.
resigned in 2011, for example,
Oh, okay.
when the Fed started to overextend their liquidity policy, continued
after
to
the
use
global
quantitative
financial
easing.
crisis.
Yeah, so historically, I think our first podcast was called Gain of Function Monetary
Yeah, it was,
Policy,
yeah.
which was about the Fed's overuse of QE, or liquidity policy, not just to stabilize the US economy, but in order to try and steer the economy.
Yep.
And he was a very vocal critic of that at the time, and obviously, it has had a huge effect on global financial markets and US financial markets, and he's been a very vocal critic of that, and a lot of that has driven the gold and silver trade in recent years.
Right.
The fact that he's now come to the fore as the next Fed chair, that's posed a threat to the sort of debasement
Suggests it might
trade
unwind.
that has had so much momentum in the last couple of years.
Okay. So you've explained a little bit about why people would hold gold and silver and see them as safe haven assets. Is there anything else, I'm just thinking about our clients and why we potentially have gold and silver in portfolios?
No, I mean, well, just on the outlook then, I would highlight that, yes, it has been an extraordinarily strong period for gold and silver.
Yeah.
I don't think that Kevin Warsh and these technical sort of margin requirements fundamentally changes the outlook. The fiscal trajectory of the United States is still very uncertain. We've still got a lot of government spending, a vast deficit. I think Kevin Warsh is a good candidate for the next Fed chair, and I think his criticisms of the Fed's liquidity policy are absolutely right.
Okay.
But the fundamental picture for
Yeah.
gold and silver and its hedge against the concerns of the US's fiscal trajectory is still very valid.
Okay.
I still think we're in the midst of a gold and silver bull market.
Right.
But admittedly, it has been very, very strong in recent years. But I don't think recent events change the fundamental outlook and the fundamental picture. It's still very, very good positions to have in a portfolio.
Well, thank you. Well, I suppose I should sum up what is in my Canaccord takeaway coffee cup this week. So gold, silver and Bitcoin all tumbled in value last week, triggered in part by some margin liquidity pressures, but also by the nomination of Kevin Warsh as the new chairman of the Fed, who is a vocal
critic of the Fed's historic overuse of liquidity policy.
Thank you. Nicely summed up for me. Even though we've seen this sort of dip in value, we still believe that gold and silver and alternative assets are still worth holding in a diversified portfolio as an alternative to equities and bonds, a long-term store of value, a safe haven. Anything else to add?
Yeah, maybe the only other thing I'd add is we're also seeing copper as a it's not a precious metal, but silver and copper also share some qualities. Demand supply very constrained, so I'm optimistic on metals outside of precious metals as well. And copper's one to watch at the moment.
Thank you very much. I hope you enjoyed the Canaccord Coffee Break podcast, and do share your thoughts with us. Any feedback, any questions, anything you specifically would like us to cover, drop us an email at coffeebreak@canaccord.com. Thank you.
Thanks for listening, everyone.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.